So let's get today's show started. Frontier Opening Bell, Monday, the 24th of August. Welcome, Chima Ukadike of Vetiva Capital. She's the consumer goods analyst. Good morning, Chima. I hope you had a great weekend.
Good morning, Boston. Yes, I did. Thank you. I hope yours was great as well.
I look really great this morning. We could all use some weekend, don't we? Ali, I'm sure Ali had a very nice weekend. Ali, the founder and CEO at Rich Frontiers Management. Good morning, Ali.
Good morning and good to see you, Boston, as always.
Thank you. Thank you very much for coming. As always, we appreciate that. Nigeria's GDP, of course, is the biggest figure we're trying to wrap our heads around. Over the weekend, Bloomberg reported in a new survey that Africa's most advanced economy, that South Africa, will contract 8% this year. That's a slight upward revision from 7.5% previous, because the authorities in Pretoria said not to have a clear plan on how to get the economy back on track, make sure there are reforms, and sort out the blackouts. In Nigeria this morning, about an hour ago, the Statistics Office released Nigeria's Q2 numbers, printing 6.10% in the negative, 32 against 1.87% positive in the first quarter, and against 2.12% positive reading in the second quarter of last year. Oil GDP contracted 6.63%, non-oil GDP contracted 6.05%. According to the data from the NBS, 13 sectors were in positive territory in second quarter against 30 sectors that were positive in the first quarter. In other words, that's more than half in the quarter on the territory. Ali, let's have your helicopter view of this number.
Yeah, so I think with respect to the Nigerian GDP number, I think the market was actually expecting a worse number. So in some respects, this number outperformed expectations. It was a perfect storm in quarter two. We had pretty much a hard lockdown. Global economies and African economies came to a standstill. And I think if you compare it, for example, with the forecast in South Africa, Nigeria didn't do as badly as some analysts expected. The issue will be the recovery, and will we see a V shape? Will we see an L shape? What exactly is the shape for the next two quarters? And I think that's what everyone's going to be looking at closely and trying to model. And I think that's going to be really the thread of the challenge going forward. So overall, we had that big oil dump in that period as well when we went negative. And therefore, my takeaway was that actually this was slightly better than worst case expectations.
Mm. Okay, a quick one there from Chima Ukadike. When you look at the numbers, what sectors would you be particularly looking out for?
So for me, I think the major sectors to really focus on are the oil sector, the financial services sector, the telecom sector, the manufacturing sector, all for their contribution to GDP. Although for the oil sector, we know that it contributes about 10%, and it had the most significant decline in terms of growth. So it declined about 67%. Oil refining activities, that is, and we all know the reason why. A savior for us was telecommunication sector. We saw double digits impressive growth, even when compared to its Q1 2020 counterpart, which was very impressive. We also saw significant growth in broadcasting and all. One other sector that is quite significant or important for us to look at is the manufacturing sector. In it, the food and beverage sector, which declined only about 3% this quarter. We can see we had expected it, given the impressive results we had been seeing from some of these food and beverage companies for their Q2, H2 results. We saw that sugar companies were doing well, food staple companies, pasta companies were doing well. Brewery companies, although they had performed poorly, they were still able to perform better than I had expected. So I think all those combined were able to cushion the expected loss we were expecting from the food and beverage and manufacturing sector as a whole. I think that one thing that has really helped the GDP numbers we're seeing now is the border closure that we saw that we had towards the end of 2019. Although we had that same border closure in Q2, we're seeing that a lot of things closed down. We had lower trade, external trade, internal trade during the saw that we had expected that to significantly affect and impair growth in production. And so I think that this growth figure was, or the decline figure we're seeing now is quite, would I say, almost quite okay.
I take it like Ali says, I'm sure we're looking at 6%. Some folks on Twitter a few minutes ago were saying we're expecting 15% decline for the GDP. Ali, where do you think the fault line really is for the Nigerian economy, really, in terms of how it will contract? Looking at the size of the informal economy, 85% of the entire economy, the formal sector is just about 20% or less.
So that's a very valid point, and quite often there's an argument that our measurement of GDP is not entirely accurate because we're not able to properly capture the informal economy, which in my experience is a great deal more resilient and displays organic momentum in many respects. So that's a very valid point as to our data capture capabilities. Are we really reflecting back with accuracy what is happening in the totality of our economies? However, having said that, clearly, the trend this year is very bearish. We're seeing contraction across the entire continent. And I think at this moment in time, touching on your other point about the South Africans not having a proper economic plan, policy making is at the fore. And policymakers really need to deliver. This is the moment when the going gets tough, the tough need to get going. And my question, which I would throw back to people watching your show, is do we feel confident that our policymakers have the right policies in place to stabilize this and to trigger a recovery? Because we're now, according to my data points, at a 25-year low in GDP terms for Africa. Per capita GDP in the two biggest economies, which is Nigeria and South Africa, has been in retreat for more than 6 years. We need to turn it around. And I'm just sitting there wrestling with where exactly is the silver bullet going to come from and how is it going to come?
Interesting thoughts there about the fate of the progression of the two largest economies in terms of population, in terms of significance when you talk about South Africa for the rest of the Southern Africa all the way down to Comesa region. And then you're looking at Nigeria, not just impacting West Africa, but all the way a little bit to the northern part of the continent, all the way to Morocco and elsewhere. So when you look at these GDP numbers from Nigeria and you look at sectors, you begin to ask yourself, like the metal mining, for example, according to data we got this morning, our coal mining was up 10.5% against 43.41% contraction in Q1. This is one of the sectors that grew out of its negative position previously into positive position. Yes, of course, we talk about coal mining, you talk about quarrying, but again, construction sector actually declined 31.77% within the period, second quarter under review. So when we take a look at this, Chima, and we look at the services, the sector that is actually the engine of all everything we do, which is the banking and financial services sector. This is the sector that grew the financial services industry 28.41%.
Yes, I agree with you. This has been the backbone of the of growth for us for a while now, and the growth we saw in this sector. I'm sorry, I can't quite remember the value you spoke about.
For the financial services industry, 28.4%.
which is very substantial, even more, much more than the growth we saw in the telecoms sector. For this, I would agree. I would agree with these numbers. I would say that it's not unusual, given that as people had to stay more at home, there was an increase in the level of online trading, online purchases, and so we saw that would affect would increase and impact the transactions, the banking transactions that would be carried on. And for me, many of these banking financial services firms were better positioned to take advantage of the remote working conditions imposed by the lockdown. So I wouldn't say that a lot of their operations were hampered, and so I think that the numbers quite support the what happened during the last quarter. For me as well, I think that going into the next quarter, going into Q3, we should see that this decline will subside a bit. We may not see that it is back to positive territory, of course, but we should see that we will fare better in Q3. One is the fact that I just saw news this morning that Lagos State is planning to open activity centers, cinemas, clubs, and other social centers, and that is expected to affect economic activity into this quarter. Well, into this quarter and the next quarter. So I think that going forward, we should be seeing a lot more positive news. Also, I forgot to mention, I think that with the added effect of the increased inflation on these figures, I think that is why we had to see such increased numbers. I think that Q2 has really performed better than many analysts had expected, given all the challenges therein.
Yes, I tend to agree with you. Ali, when we talk about financial services industry, basically the big boys, the big name within the financial services is basically the banks, as it were. I'm sure you look at the numbers from the South African banking industry, you look at the numbers from the East African, the Kenyan banks, Equity Bank, Cooperative Bank, Family Bank, the rest of them, and Standard Chartered as well. So I'm sure you have your thoughts about how Nigeria's banking financial services industry was able to pull this about at least about 4 to 5% growth between the Q1 figure and the Q2 figure. First quarter 24%, second quarter a little above 28%.
I've got to be frank. I mean, that's a real outlier number. If I look at it in the comparison with what I'm seeing out of South Africa and Kenya, and I'm curious as to how the Nigerian banking sector has produced this kind of growth in this kind of economy. And I understood what Chinma was saying, which was there has been this surge into online, which is online banking, which you're also seeing in Kenya in terms of mobile money movement. But, given the current environment we're in, where banks are having to provision further, where you've had South African banks report at best minus 50% EPS growth, and admit that these are very difficult market conditions. Same story in Kenya. To me, that number is remarkable and anomalous, and I'm going to have to look into it a lot more closely to see exactly how that number was produced. But I suspect it's talking essentially about the digitization effect of COVID, and that is why we've seen that kind of growth. But really, in an overall downtrend of minus 6.1% GDP, that is a remarkable outcome and very noteworthy.
Ali, just a quick one there. The transportation activities for the GDP we have in Nigeria were negatively in the water. Transportation sector fell nearly 50% from Q1, 2.82%. Road transportation, 51% in the water. Rail transportation, the worst, 63.32%. Air transportation, 57.38% in the water. So again, if you look at this transportation services sector, then you say, look, does it mirror the rest of the continent in terms of the total lockdown? Do you think, if you look at Nigeria, if you look at rail transportation, 63%, I'm sure Uganda, Rwanda, and others will report similar numbers in their GDP because of the lockdown.
So I haven't seen the actual data releases for East Africa. What I've been tracking are the mobility indices that Google and the likes release. And what this speaks to is the fact that in this reporting period, we pretty much had a hard lockdown in most parts of Africa. And I think these are the sorts of numbers that one would expect to see. South Africa might be even more dramatic than those numbers you have produced because they were really locked down. So I think what we've got to all think about is we've got to look through this extraordinary downturn we've had, where people were essentially in quarantine, and when you're in quarantine, you're not really going anywhere, and hence those numbers, very, very dramatic numbers. In East Africa, I think you're going to find Rwanda had a very hard lockdown. Tanzania is probably going to be a lot better than these numbers we've seen out of Nigeria, because President Magufuli rejected the whole COVID story and has kept the economy running a little bit like Sweden. So it's going to be very interesting to compare different African economies to see exactly what has transpired. But I would say Kagame's Rwanda, hard lockdown. Tanzania will be on the other extreme. It's going to be very interesting to do some analysis continental-wide on that. Yes.
Yeah, I know. We're going to spend the days and weeks ahead poring over these numbers and comparing notes here on the show. Is going to be interesting to see what happens to each region and the virus figures that we've seen across these countries as well, whether they tend to correlate with if you have a very hard lockdown in Uganda and Tanzania, or sorry, in Rwanda, perhaps the economic numbers will look better. And if you had a bit of a Nigeria situation, or Tanzania or Madagascar, then it's going to be a different story. Chima, what's your take for this week's market? Let's wrap it up. Do you think these GDP numbers will impact the market? Do you think the market has priced in this economic contraction for Nigeria?
I think that these numbers are quite historical, and so we'll see a limit to the effect that it will have on the investor sentiments going forward. Especially because I think that some of these investors are aware of what has transpired over the last quarter, and they have punished some of these stocks for it already. They have taken profit as they can, stayed away as they can, and have even started to return to the market. In recent times, we've seen that for the consumer goods sector, which has been one of the worst beaten sectors year to date, had lost about 32% year to date. And we saw investors returning back to that sector, bargain hunting and the likes, and we saw that sector improve below 30% decline year to date. We've also been seeing improved sentiment in the banking sector as well. So for me, I think that going forward, because we expect economic activities to really improve. Nobody's expecting it to go into the positive region, but we expect it to improve somewhat due to the environmental and, well, the lifting of some of the restrictions that we had in the previous quarter. I expect that we'll see some positive sentiment going forward into this week. I don't think that the results of the GDP would have a significant impact on trading sentiments in the next week, this week.
Okay, great. Ali, you think this is most likely the hardest GDP fall for Nigeria this year?
Well, I was looking, I think this is the hardest GDP fall you've had in many, many years. And I think one would expect a rebound from these levels, simply because this was the big impact we had was in Q2. If you look at the data points around COVID, I saw Africa CDC becoming a little bit more optimistic. I'm not ready to become too optimistic, because what we're seeing is a downturn in South African numbers, which is distorting the overall figures. But overall, I think, yes, this was the deep dive, and we're going to rebound from here. And the issue is the violence of the rebound.
Yes. Thank you so much, Ali. We appreciate your time. CEO, founder at Rich Frontiers Management. Thanks to you and Uchima Ukadike, consumer goods analyst at Vertebra Capital Management, raising the curtain today as we get Nigeria's GDP figures red hot from the press. Thank you so much, everyone. See you again tomorrow. Have a great week ahead. We appreciate your time.